Tiaki Capital Podcast, Smart Money Deals.
This is Kenneth Leong and Pauras Rege from Tiaki Capital. We thought we'd take a few minutes today to update you on the state of the mergers and acquisitions market in New Zealand. So to kick off, perhaps I'll just get my business partner Pauras to tell us a little bit about what you're seeing in the market.
Yeah, thanks, Kenneth. Well, last couple of months have been really interesting.
Yes.
Because there's been a lot of change that we're seeing in the market sentiment for a lot of people out there, which is affecting a few things in the market. What we're specifically seeing is that the cost of capital, because the interest rates have gone up, the cost of capital has increased. Now, the result of that, what happens is asset prices and asset values also go down. So when interest rates goes up, we know the cost of capital goes up, and that is clearly affected in the asset values of whether you talk property or you talk businesses. They have come down. On the other side, we've seen a lot of the buyers that are out there or the investors that are out there being a bit more cautious before they make the move, and rightly so, because what's been happening geopolitically, what's been happening in the current macro environment as well, is just affecting their decision-making ability.
Sure. I mean, there's a lot of, I guess, negative sentiment out there. We see with consumer sentiment being weak and investment sentiment being weak as a result of actually largely events outside of our control, right? Like what's happening in the US, what's happening with Russia and Ukraine and China. So there are a lot of factors that are, I guess, affecting how investors feel and whether they should invest and how much they should pay.
Correct.
Yeah.
Ken, like saying that, we live in New Zealand, right? Our economy is pretty small in comparison to the other countries. So in New Zealand, economy is again run by small and medium enterprises. And for them to grow, it's very hard to grow organically. So the deal activity is still going to continue. The transactions will still continue because certain fundamentals of our market have to allow that. So yes, it is getting, I wouldn't say tougher, like it's getting longer, the duration, but the activity is still there. So
yes.
We just wanted to basically tell people that it's not, yes, whatever the sentiment may be negative, but it's not affecting as much in terms of the deals per se.
Sure. But in terms of the funding for those deals,
correct.
That's where there's been some changes. And perhaps you want to update our audience about what you're seeing in terms of banks' appetite and how they're evaluating deals.
Yeah. So now in terms of when the banks look at a deal, they look at it with a lot more scrutiny because the key word is cash, right? Cash flow positive.
Cash is king, yes.
Absolutely. Cash flow positive businesses will always be favorable and always will be bankable. So when we're looking at transactions, industries or businesses that are producing strong EBIT or cash flow, the banks look at them favorably. And the businesses that don't, banks are a bit hesitant because there are inherent risks that they are seeing in the market with the long term and the short and the long term view. So that means that the appetite to fund is not strong for those businesses.
Yeah, so and with a lot of private businesses we deal with, they often use their private residential or commercial properties as collateral. So with the state of the property market at present, I guess it's also a little bit harder to secure finance against those properties.
Absolutely.
So yes, look, overall, I mean, those sorts of conditions, these are largely macro factors that business owners can't control.
Correct.
How about, what's within the control of business owners? So with the people we deal with who are largely private business owners, and some of them are thinking of selling. So what sort of advice will you give them, given lots of factors outside of their control?
Yeah, absolutely. I think the few key things that the business owners need to look at is, first and foremost, number one is you need to make sure your house is in order. Now, what I mean by that is work with your accountants, your lawyers, and any other business consultants or advisors to make sure your financials are up to date. The financials are clean. There's no things that are in there which shouldn't be in there. and make sure that you do that for a considerable period of time. So make sure that your internal processes are also documented. Make sure in terms of your management and your teams, the owner is a bit removed from the day-to-day running, or he's not the key person in there. So there's a few things that they can do which is under their control. Another thing that they need to be aware of is when talking to when getting a valuation or appraisal on their business, be realistic. Of course, we understand that our private business owners have owned these businesses for many years, so there's an emotional attachment to their business, and because of the hard work that they put into this. But at the end of the day, today's market is very different to what the market was a year back. Again, basically the factors that we've spoken about already in terms of interest rates, cost of debt, they have affected the valuation. So be very realistic, have a realistic view of that valuation. And also the third thing is gone are the days where you can just put the business and hope it sells super quick. It doesn't work like that now. What we're seeing in the market is the transaction times have increased largely. What I would say increased largely for the last 2 years, but they've actually gone back to normality, what it was pre-COVID. So make sure you build that into your expectation. And we understand that there are few business owners will have their friends who would have sold their business the last 2 years, who have managed to get a faster sell. But again, that was an effect of the market. It's again very much like the housing market. What you are seeing now, take that as a parallel reference for your business selling from that perspective as well.
Yeah, no, those are really good points. So, look, I mean, in summary, those of you who are thinking of selling your business, the key is to prepare early. And so do your homework and talk to our team early on, and we can assist you with making plans for exit. And those of you who are thinking of raising capital and raising debt, preparing for a sale, it's best to engage with professionals early and make preparations. And look, we're here to help. Thanks for tuning in today, and we appreciate the opportunity to share some of our thoughts with you. Click subscribe to our channel, and we look forward to catching up next time.
Thank you.